All right, this brings us all the way to the calculation of gift tax. And if you want to make $1 million, what I suggest you do is you learn this inside and out, and then you find a way to explain it that is understandable by the average human being, and then put it online and sell ads on the side, because you will not find a decent video explanation, in my opinion, of calculating gift taxes. I'm going to give it a whirl. I've included a link to this sheet that I'm going to share with you on Canvas. So if you go to the homepage under this module, where is it? Google Sheet with example and answers to the activity. So what I wanted to do is to take the example that was provided in the book. In fact, I believe it starts on page 153, where we've got Tracy, who gives his daughter Skylar, oops, I'm wrong, page 152. Example 5.37. Tracy gives his daughter Skylar outright gifts in 2005, 2006, and in 2020. And it includes an abbreviated schedule showing how we calculate the gift tax, and also how much of his lifetime exclusion he uses up. But before we look at those examples, I just want to emphasize something. Let's look for a moment at the schedule of income tax, or of gift taxes that we've enjoyed historically. And let's first start by just saying, hey, in 2005, the lifetime exemption was on $1 million worth of gift and estate tax. And it was still $1 million in 2006. And then flash forward to 2020, and it is, because we've talked about a lot of ad nauseum in this course, that the Tax Cut and Jobs Act cranked that thing up to $10 million on the date that the act was passed, and it has increased by inflation every year since, so that now in 2020, your lifetime exemption has increased to $11,580,000. And that's unified for both gifts and estate. And what's funny is we use these terms. Oh yeah, you could, you've got estates worth either $1 million back in 2005 before you'd have to be taxed on it. Now it's up to $11,580,000. But what's really given away isn't this $11,580,000 of free transfers. It's the tax credit associated with it. And the tax credit associated with it has to be calculated by using this tax schedule. And politicians have really had a great debate about, well, what should this tax schedule be? There's at least been some agreement on what the tax rates should be on the first $1 million worth of a taxable estate. Because if you look back from 05, 06, and 2020, we could look at a much bigger historical view of what tax rates have been. They really haven't, fought over the tax rates at these lower estate levels or these lower gifting levels. Remember that they're unified because it's lifetime transfers. Well, I should say lifetime and at death. That's what the unified credit is all about. It's unifying how much you give away during your lifetime and how much you have at death, and putting them all into the same limit. So when you look at the tax rates, the highest tax rate at $1 million ends up being $345,800. So if somebody had an estate worth, or gave a gift, a taxable gift of $1 million, the tax on that is going to be $345,800. And every dollar over that $1 million would have been taxed at 41% if it had occurred in 2005. Same thing in 2006. But in 2020, we've messed with it and we've said, no. Anything over $1 million is going to be taxed at, you're going to pay the $345,800 plus 40% on the excess. But looking back at 2005, we continued this bracket. We kept inching up until we got to transfers of 200,000, at which point the highest tax rate there was 47%. And in 2006, they changed it, dropped it down to 46% on transfers over 2 million. And then, of course, where we're at today again. The minute you hit $1 million worth of taxable gifts, it's the 345,800 plus 40% on the rest. And that's what creates the tax credit. So your tax credit is the equivalent. It's the equivalent credit for this $11,580,000 worth of taxable gifts or taxable estate combined. And so the math on it is just simply taking. So if you've got 11,580,000, what is the equivalent credit? Well, the equivalent credit is going to be on the first million, 345,800 plus 40%. Again, this is in 2020, plus 40% of every dollar over that amount. So equals 345,800. I could just do this, equals this plus this times this minus $1 million. I've already done the math on the first million. That's captured in the 345,800. So it's 40% of 10,580,000. So my equivalent credit is going to be $4,577,800 if I were to have a taxable estate of $11,580,000. The whole thing would be wiped away by my equivalent credit. So it's a tax credit deal. This language is so awful, though, that we just instead stick with, well, in general, you could die with this much in your taxable estate and it would be wiped away. Every dollar over that is going to be taxed at 40%. Now, you as a student of gift and estate tax have figured out, well, we care about this because this is a lifetime deal. You start giving gifts in 2005 and you're like, hey, what if I gave a gift in 2005 when I was, alive, obviously? I gave a big gift and I ended up having to pay estate tax on it because way back then my exemption was only $1 million. But now it's 2020 and maybe I paid my gift tax back in 2005 because I exceeded it. In 2020, I could give away a lot more and not have to pay taxes. How does this all come out in the wash? Well, it all comes out in the wash because when you die, you're going to get a credit for the estate tax that you paid back in 2005 if you happen to be lucky enough to die when the umbrella under which you stand has been raised. But that's the other key of the gift tax, which we'll talk about, is just notice the progressive nature. The more you give in any one year or in cumulative years, the more you'll pay in tax. And that's why we do this awful calculation. And so what I've included here is my language on the explanation, but I just want to spend a minute empathizing with you, because when you look at how many different ways your book tries to explain this, on page 150, you have an 8-point list on the calculation of gift tax. On page 151, there's a 17-point list. And then on page 152, there's a 13-point list on how you calculate it. So these steps are not consistently laid out. So what I've tried to do is, in this example, give you the steps, the step numbers as they exist on the pages of the book. I don't know that it will be that helpful, but. So let's start with Tracy and his gifts to Skylar. In 2005, Tracy gives Skylar $600,000. I'm sorry, $611,000. But we only count $600,000 because in 2005, the annual exclusion for gift to any one person is 11,000. So we drag that number down here. Total taxable gifts for the current year, 611, minus the annual exclusion, 11,000. Hooray. I'm going to hide these so it's not so. Hide. And so his current year taxable gifts, 600,000. He never made a taxable gift before. So his total taxable gifts, lifetime. That's what this line is. Total taxable gifts, not for the year, this is forever, 600,000. On the next line, the tax on the total taxable gifts, current year and prior years combined. So we have to go down to this schedule and figure out what $600,000 amounts to for tax. I've included the formula, but essentially we know 600,000, where are we? At least 600,000, at least 500, but less than 750. So we know it's 155.8 plus 37% on the 100,000 amount that goes over the 500. And that's where this 192.8 came from. So that's the tax bill on the $600,000 taxable gift. But of course, remember that year we could actually give away $1 million. So we had a credit that we were going to get to use. Now the tax on the prior year gifts only based on the current tax rate. In 2005, we don't care about this because this is the first time that Tracy has made a taxable gift. But just know that we make you go through all of this math because we're really trying to figure out how much we want to make sure that this year's taxable gift is sitting on top of prior year taxable gifts so that you're taxing yourself in the proper tax bracket. Because if you were to drag, let's say he had given a taxable gift previously of $1 million, and so now we're at 1.6. Well, the tax on this year's gift wouldn't be at the $600,000 level. It would be at the $1,600,000 level, which is a much higher tax rate. That's why we make you go through this crazy math. Tax on everything you've ever given, minus the tax that would be due on the things you gave prior to this year to arrive at the tax that is specific to your gift for this year. And then we bring in that year's applicable credit. Remember that one thing that has stayed consistent is the tax rates for gifts up to $1 million hasn't changed much. There wasn't any arguing politically about that level of gift, and that $1 million level applicable credit is still at $345,800. So that's the tax that would have been owed on $1 million gift, except in 2005, you could have up to $1 million in taxable gifts before a tax would be due. And the tax that would be due on $1 million gift would be $345,800. But since that is the exemption amount, this is the applicable credit. And you haven't used up any of this credit in previous years because this is your first year of making a taxable gift. So this is how much is available to use of your applicable credit. And because the amount of tax that's owed on this year's gift is less than the applicable credit, that's how much of the applicable credit you're using. So your total gift tax this year is nothing. You used some of your applicable credit to cover your bill. And next year, you'll be able to carry over this 153,000. That's just simply, this is my number. I didn't see this anywhere, but you'll see it in the 2006 calculation. So 345,800 was the applicable credit. We just used up 192,800. We've got 153,000 left of the applicable credit. Questions so far? All right, let's move on to 2006. I'm going to hide 2020. Come on. Hide. So in 2006, he gives her another gift. He gives her $712,000. This year, the annual exclusion went up to $12,000. So technically his taxable gift was $700. Now, it wasn't his first taxable gift. His prior year taxable gift gets, prior years, all of them, get pulled forward. And so now his lifetime taxable gifts have risen to $1.3 million. And it's almost like whatever happened historically, whatever tax math applied in prior years, we only partially care about, because we're going to redo the tax math with that year's numbers. And so for his total taxable gifts, the tax that's owed using 2006 tax rates would be $469,800. So if we take this $1.3 million down to this schedule that existed for 2006, 1.3 is going to be $448,300 plus 43% on the excess. So 43% on the $50,000 that went over that. And that's where you get the 469.8. And then the tax rate on the prior year gifts only. So now we're going to take, and it just turns out to be the same. Don't be fooled by that, because the tax rate on the prior year gifts, you have to use the current tax schedule to do that. It just turns out that the tax schedule is no different between 05 and 06 on a $600,000 gift. So the balance of the gift tax for the current year is just simply taking the tax rate for the whole 1.3 minus the tax rate for prior year gifts to arrive at the taxes that are owed on this year's gift. And again, with the applicable credit, this is the one that's in force for that specific year, minus what you used in the past to get you to what's left for you to use this year. And you look at the smaller of the applicable credit or or line 8, balance of tax for this year. So we used up all of our applicable credit because the tax owed on that year's tax gift exceeded the credit that was left over. And so Tracy had to pay tax of $124,000. Ouch. Painful. Painful. But behold, 2020, poof, we now have a much higher limit. And in 2020, Tracy gave Skylar a gift of $10,595,000, that lucky Skylar, $10,595,000. Okay, we get to rate it down by $15,000, which brought his taxable gift to Skylar for the year to $10,580,000. Now we've got to see, in order to figure out what his tax rate is, we've got to have it sit on top of his prior year gifts. So over his lifetime, this brings his lifetime gifting to $11.88 million. And we take that $11.88 million and apply the tax rates that were in effect in 2020. And we know that it's going to be $345,800 plus 40% of everything over that. So 345,000, where are we here? Total taxable gifts, tax on the total gifts for the current year and the prior year is $4.697.8 million. Tax on the prior year gifts only based on the current tax rate. This is taking the $1.3 million worth of taxable prior gifts and applying the current schedule. Notice how this is a better deal for Tracy, because now this 1.3 is being taxed at, that 300 is being taxed at 40% instead of 41%. This is why we do this awful math. And his tax on the again, tax on all gifts, tax on prior year gifts, brings us to the balance of the gift tax owed for the gift that he made this year. We know the applicable credit for 2020 is 4.5778 million. Did you have a question? Oh. And that is again, the tax credit that's associated with giving away $11,580,000. And the applicable credit used in all prior periods used up the full 345.8 that was available in previous periods. So the balance of the applicable credit that's available and the applicable credit that will apply, it's the smaller of 8 or 11. I almost wish we wouldn't have done this math so that they were equivalent to make it a little bit more obvious, because essentially what this example was trying to show was how much could be wiped out by using that applicable credit. So in this year, Tracy owed no tax because he used the remaining credit, this brand new room that we created by increasing the lifetime credit for anybody for gifting and for their estates.